Hi, I'm Lauren Staley from Infolio Property Advisors in Melbourne, and we've got Chris Gray from Your Empire in Sydney and Zoran Solano from Hot Property in Brisbane, and together we represent Your Empire nationally. Now, it's been another interesting month in real estate. I don't think that ever changes. What are we all seeing in the market? I'll start with you, Chris.
Oh, look, the biggest thing for me, and I'll pull up the graph at the same time, is I always love this core logic data. It just tells us exactly what's going on. Obviously, it is the average, so it's not every single property, and it depends on your price range and where you are. But certainly for the quarter, 4.9% for Sydney, Melbourne 1.8%, Brisbane 3%, and for the month, 1.7 in Sydney, 0.7 in Melbourne, and 1.3 in Brisbane. So certainly we're typically buying $1.5, $2 million properties. And so really that's almost kind of 50 to 100 grand literally in capital growth in the last 3 months for a $1 to $2 million property. And so that's why all of us have been saying all the time is if you've got the money, now is the time to buy, as long as you buy the right property at the right price. So sure, things are costing more money because the interest rates have gone up about 4% or so, but suddenly you get 5% growth in the quarter. And as long as you can cash flow it, that basically balances things out.
Yeah, I actually thought it was quite interesting. I mean, if we look at, Sydney, Melbourne and Brisbane together, I mean, we're talking about negative growth over the 12-month period of really on average of maybe only 3%. And given how much we did grow in value, I feel as though the market's held really well. Like it's really held firm considering what's been going on. Zoran, what are you seeing?
I'm seeing a resurgence in the market for sure. We're definitely in what I would sort of class as a rising market or a competitive market. There are more buyers than sellers, creating multiple offer situation. What that statistic graph tells me is the window of buying cheaper now than you could have previously is closing. Like we're still on the annual, we're still in a negative, but it's only going to take 2 or 3 months of what we're seeing for us to be back in positive territory for 12 months. So I think that if people want a sign that the market is recovering and want a window of time to get in before the market goes past the previous peak, the next 2 to 3 months is the time.
Yeah, I think it's been really interesting for us. You can see that Melbourne hasn't had quite as much growth as Sydney and Brisbane, but in reality, there's been very little available to buy. So there's not been much transaction. In my entire career, I don't think I've ever seen such a stock deficit as what we have at the moment. But by all accounts, we're expecting that there's going to be an influx of property available, which is so needed because, again, like what you're saying, Zoran, we've got more buyers than we do sellers. So we are in a competitive space. And we're just hoping that we might get a few more properties on the market so that we can actually start buying some things for these clients that are ready and willing. But again, that's going to put pressure on pricing again. So the negative sentiment is really interesting because the negative sentiment that we're hearing isn't in reality what's going on in the coalface, particularly in the markets that we're dealing with. What are we expecting to happen over the next coming months? What are we predicting might happen in this property market? Chris?
Look, I mean, again, there's all this talk in the media, and again, all three of us, the message over the years has been don't listen to the media, because for ages it's been about the mortgage cliff, but in reality that's kind of disappeared, not a lot's happening. There is now some stories to say that there's more investors selling than there is home buyers. But again, this from being in the media for over 10 years, I know that these companies are basically clutching at straws all the time to try and come up with a story. So whether they believe the statistic or not, they don't really care. Because I remember CoreLogic on Sky News, they said, we bring out capital growth figures literally every day now. And I said, yeah, but I'm looking decade after decade. And they said, well, we would do the same for our own personal investing, but the market wants it or the media wants it, and so they can report on it. So that's why I take everything with the media with a pinch of salt, because they're basically, the mortgage cliff they're not really talking about now, but now they're talking about some investors selling. Then they were talking that interest rates are pretty much done. Now they're talking about there's potentially another 3 in there. There's still talk about interest rates dropping. The RBA's now come out to say that they're not going to meet 11 times a year. I think they're going to maybe meet once a quarter. So there's all this stuff. And this is why I don't think you should listen to it, because it's so confusing. And this is what everyone then does, is they sit on the fence and do nothing. And they miss the 20 or 30% growth that we had in 2021. They then try and time the market for 2022. They missed that anyway. And then even as Zoran was saying, is like, even if you manage to pick the bottom of the market and then rebuy again, it's literally a couple of months difference whether you actually make any more money or not.
Yeah, no, that's a really fair point. One of the things that I was thinking about over the course of the next few months is certainly as we've got a rent roll, we do see a lot of the movement from the investor profile, not just the home buyers. And interestingly, we are now getting more people thinking about selling. So I think that that's one thing that they're probably getting right. Investors are needing to sell because of the ability to hold on. You know, they're sitting there going, okay, well, do I pay for my children's school fees or do I put hold on to the property? In reality, I don't think that the time that we're in right now, where it is tight, money is tight, I don't feel like it's going to last as long as people are predicting. And I'm hopeful that more people can see the light at the end of the tunnel and potentially hold on to their assets, because what will happen is they'll go through a period of perhaps of 1 to 2 years of it being tight. Cash flow will be poor. If they sell that asset, they won't be able to rebuy it back in, particularly with apartment buying in Melbourne. What we're seeing is that with the resurgence of people coming into our city, the pressure on immigration, the apartment living is going to become very, very desirable again. So the prices of those properties, although they've been a bit stagnant in Melbourne, will go up if they can just hold on to them. So selling now, to my mind, you'd only do it if you absolutely had to. Zoran, your thoughts?
I 100% agree, as do you. We have our property management side of the business, and we are seeing more and more clients, uttering the words of, I'm thinking about selling, especially now that the financial year has ticked over. I think what a lot of people are looking at is they've got equity there. They've got this big chunk of cash from having invested for the last 5 or 10 years, and it's sort of stuck. And they want to unstick that money, perhaps to upgrade principal place of residence, just lower non-deductible debt against their principal place of residence, whatever it might be. And obviously that's fair enough. I think individuals need to reflect on their own personal financial situation and where they're at in life and make an informed decision. Every client who says to me, I want to sell, I have, I guess, a little mini debrief with them and a sanity check just to make sure that it is the right decision. We exhaust all the other avenues first. Should we double down and should we actually be investing into that property to increase its rental yield and manufacture some additional equity to enhance its serviceability to help retaining it? Because once you sell it, it's gone, right? Property is a lumpy asset. It's expensive to get in. It's expensive to get out. You have to really make sure you're chatting with your consultants, such as us, before making that decision to make sure you get all the advice.
And look, in 30 years, I've never met anyone that says, I've sold and I'm really happy, because they always look at the price afterwards. And as you said, Lauren, these interest rates don't last forever, just as much as the low interest rates don't last forever, nor do the high interest rates. So at the time, look back over the last 20 years, any personal stuff that people have gone through, from death or divorce or cash flow issues or issues with their teenage kids or something like that, at the time it feels an absolute nightmare. But when you look back in a few years' time, in hindsight, it's never that bad. And so if you can stop yourself from selling, again, the chances are you won't get back into that suburb, into that same property, because of all the costs and again, serviceability to qualify for a mortgage. So if there's anything you can do just to hold on, potentially it is worth it.
Yeah, I couldn't agree more. And so far as stock levels are going, as I mentioned, Melbourne's had, a terrible time. Just people, in the market our home buying market, I'm not talking about investment grade, a home buying market where on average we're sort of spending 2 to 10 million. There's very little that's being traded. There's very little that is coming on the market. Certainly there's more off-market opportunities. We're dealing with more off-market than we have historically in the business. Although it's patchy, you could get 20 for one client and 0 for another. It's ups and downs and it depends on the brief and the luck of the draw, really. We're expecting more stock. I have been told by most of the agents that I'm speaking to that they've got quite a bit that's coming on for the spring market, which will be good. Are you guys expecting the same? Zoran, what do you think?
Yeah, for sure. I think so. I think one of the biggest limiting factors for sellers at the moment will be whether the property is tenanted or whether they have the courage to vacate, prepare and style the property and sell it vacant. Right now, I would say 8 or 9 out of 10 buyers are owner-occupier. So if you're selling a tenanted investment, which has a tenant in place for longer than 6 months, you're alienating a big majority of your market. So timing around that is crucial for investors or any seller to capitalize on their result when selling. And I guess that sort of circles back to our vendor advocacy. But for certainly, I think we're going to see the next 6 months more sellers hitting the market for sure.
And Chris, what do you think? What's happening up in Sydney so far as stock levels are concerned?
Look, I think for the last 20 years, there's never been any stock and there never will be any stock in it. And again, we're all buying in the blue chip areas, so there's limited supply in those kind of areas anyway. You go to the Parramatta's or the Zetlands and there's millions and millions of properties to choose and lots of discounts. Sure, spring, quite often, historically, there is a lot more property on the market, but quite often there's a lot of buyers in the market as well. So again, for those people sitting back to say, it's going to be cheaper tomorrow. Yeah, sure, we've had 5% growth over the last quarter, but I reckon it's going to go and dip. I reckon you're in a false economy. I think, sure, you might wait, but even so is by the time you wait, the chances are the market's going to continue to rise. And even if there is more stock on the market, if there's more buyers, then you're not necessarily going to be ahead. So again, I think it's the perfect excuse for people to sit on the fence and wait. If I've got the money, I'll find the right property at the right price. I just go and buy it. So yeah, as much as we're trying to give the news here, I say ignore most of it, just get in.
I'm with you, Chris. All right, team. Well, that's it for us for another month of Your Property, Your Empire, and giving you an update on what's happening in the market. Until next time, I'm Lauren Staley, Zoran Solano, and Chris Gray.